And in our top business story, Dubai Duty Free has ushered in the new year by announcing record-breaking sales of 6.999 billion dirhams for 2014, representing a 7.36% increase over the previous year. The figures were improved by 2014 when a new monthly sales record of 749.13 million dirhams in December, representing a 7% increase over last year's sales of 700 million dirhams. The December high was fueled by Dubai Duty Free's 31st anniversary celebrations, when the operation offered a 25% discount across a wide range of merchandise from the 18th to the 20th of December, which resulted in a shopping spree by passengers of 188.86 million dirhams during the 72-hour period. The operation recorded a staggering 26,995,367 sales transactions in 2014, which is an average of 73,960 sales transactions per day across both Dubai International and at Al Maktoum International Dubai World Central. With sales of 1.147 billion dirhams, perfume, which now contributes 17% of Dubai Duty Free's total sales, retained its position as the best-selling category. Liquor and gold followed with sales of 1.045 billion dirhams and 597 million dirhams respectively. Cigarettes and tobacco came in fourth place with sales amounting to 584 million dirhams, followed by confectionery with 539 million dirhams. Other major increases were seen in cosmetics, which rose by 19%, and watches, which also rose by 9%. Sales in Dubai Duty Free departures, which accounts for 88% of total sales, increased by 6%, while arrival sales have shown a 9% increase over last year. Dubai developer Nakheel has announced it will begin leasing office, retail and dining space at Palm Jumeirah's Golden Mile in Dubai from today, as part of its rapidly expanding retail development portfolio. The Golden Mile, which one of several new Nakheel retail projects on Palm Jumeirah, will have around 70 outlets, including a supermarket, department store, cafes, restaurants, medical centre and gym, with the first of these set to open in April, according to a statement from Nakheel. The developer, which assumed ownership of Golden Mile last November, said it is prioritising tenants who had previously signed leases with the original owners as it moves forward with its new leasing programme at the 10-building complex. Around 400,000 square feet of office and retail space is available in total. The new retail centre will provide on-the-doorstep facilities for the 2,500 people living at Golden Mile. The Telecommunications Regulatory Authority has revealed statistics for the third quarter of 2014 on the nation's most popular mobile phone handsets, social networking platforms and applications websites. According to the report, during the period from the 1st of July 2013 to the 30th of September 2014, 59% of handsets registered on the UAE networks were smartphones, a figure that has been constantly increasing over time. The iPhone 5S was the most commonly used in the UAE, comprising 3.7% of total handsets registered on UAE networks, a figure that increased by 22% during Q2 2014 and by 6% in Q3 2014. The iPhone 5 was the second most popular with 2.5% of the market share. The third most common was the Samsung S3, 2.4%, followed by iPhone 4S at 1.7%, Samsung S4 LTE 1.7%, Galaxy S Duos at 1.5%, iPhone 4 at 1.4%, Samsung Note 3 at 1.2%, BlackBerry Bold 9900 at 1.2%, and Samsung S5 at 0.7%. The report indicates that 45% of all handsets registered on UAE networks were manufactured by Nokia, although this figure has been declining over time. This figure decreased by 5% during the last 2 quarters. This was followed by Samsung at 22.6%, Apple 10%, BlackBerry 6.1%, and Sony 1.1%, HTC 1%, then the newly emerged manufacturer Lenovo at 0.9%, and Huawei at 0.8%. Although their growth has shrunk, Samsung and Apple recorded increases in their market shares in Q3 2014. From the 1st of July 2014 to the 30th of September 2014, users of smartphones and fixed internet services in the UAE visited various application websites. Apple iTunes was by far the most commonly visited, followed by Samsung apps, Android applications and Nokia OVI, while BlackBerry app came last. In terms of social media, UAE smartphone and fixed internet users made a total of 28 billion visits to social networking websites during the period. Visits to Facebook accounted for 88% of total visits to social networking sites, followed by Twitter with 9% of visits, then LinkedIn, Maktub and MySpace. The US dollar continued building on its dominant performance through the end of 2014 to start 2015 on a very strong note. The US dollar index, a measure of the value of the US dollar against a basket of major currencies, moved above 91.50, its highest level since December 2005. The biggest talking point in the first week of January was the performance of the euro, which slid to a 9-year low against the greenback. In the early trading session this morning, the euro-US dollar pair tested 1.1869, its lowest level since March 2006. The British pound also dropped to a 16-month low against the greenback, while the DGCX Indian rupee contract also moved lower below 157.00 levels. To gauge the week ahead for the euro and the US dollar, we earlier spoke to Gaurav Kashyap, the head of futures at Al Pari, Middle East.
Well, markets opened the week on the back foot against the greenback. We've seen the euro drop to a 9-year low against the US dollar, and we can expect the trend to continue in the week ahead. We have a very, very important piece of data coming out on Wednesday. That's the inflation data coming out from the Eurozone. And as a result of crashing energy prices in the last 2 weeks, the figure is expected to come in at negative 0.1%, and if it comes in this negative territory, then we can expect the pressure to be ramped up on the ECB to look at introducing further stimulus measures. Now remember, their mandate is to keep prices stable, and with inflation slipping now into deflationary levels, this is going to heighten the speculation that the ECB will have to introduce further stimulus measures when they meet on January 22nd of this month. So that should continue to weigh down the euro. Now overall, we've seen the euro crash through several key resistance levels. We can now expect a stronger resistance level to come at, support level, to come in at 1.16 against the US dollar. Overall, we're also expected to see the US non-farm payroll report releasing this Friday. We're expecting it to come between 230,000 to 250,000 jobs this week for December. They should continue to lend support into the US dollar prospects in the week ahead. Overall, the Indian rupee is also expected to remain slightly under pressure against the US dollar. On DGCX, we expect the pair to find good support at 155 levels. Also on tap for the week is some Chinese inflationary data, as well as the index for PMI for manufacturing. So we're expecting this to also give a little bit of support to some high yielding assets, but overall the trend is very dollar bullish to kickstart the first week of 2015.